Section 8. Common issues with pre-qualification and pre-approval. Pre-approval doesn't mean the work is over. By now, your buyer has spoken with a lender, completed the pre-approval process, and is excited to begin making offers. Everything seems to be moving in the right direction. Many buyers believe that once they receive a pre-approval letter, the difficult part is over. Unfortunately, that's not always true. A pre-approval is a major milestone, but it is not the finish line. Buyers can still encounter financing issues that delay or even prevent a successful closing. As a real estate professional, understanding these common problems allows you to better prepare your clients, recognize potential warning signs, and help keep the transaction on track. Financial changes during escrow. One of the most common reasons financing is delayed is because the buyer's financial situation changes after the contract is accepted. Sometimes, buyers finance new furniture, purchase a vehicle, change jobs, or open additional credit accounts without realizing those decisions may affect their loan approval. Even though the lender issued a pre-approval, they continue reviewing the buyer's financial qualifications throughout the transaction. A significant change in income, debt, or employment may require the lender to reevaluate the loan. Arizona broker tip. One of the best conversations you can have with your buyer is also one of the simplest. Tell them, until we have the keys in your hand, avoid making major financial changes unless you've discussed them with your lender first. That single piece of advice has saved countless transactions. Missing or incomplete documentation. Another common issue occurs when buyers fail to provide requested documentation on time. The lender may request updated pay stubs, bank statements, employment verification, or additional explanations during underwriting. Sometimes, buyers assume the request is unnecessary and wait several days before responding. Unfortunately, every day that documentation sits unanswered is another day the loan cannot move forward. Encouraging buyers to respond promptly helps everyone stay on schedule. Changes in employment. Changing jobs during escrow is another situation that often surprises buyers. A better paying position may seem like good news, but the lender must still verify the new employment before approving the loan. Likewise, changing from a salary position to self-employment or commission-based income may require additional documentation and could affect loan approval. That doesn't necessarily mean the transaction will fail, but it does mean the lender needs updated information before moving forward. Real-world example. Brandon and Erica were under contract on their first home. 2 weeks before closing, Brandon accepted a new position with another employer. Excited about the opportunity, he didn't think to notify his lender. When the lender completed the final employment verification, they discovered the change and requested additional documentation confirming Brandon's new salary and start date. The closing was delayed several days while the lender reviewed the updated information. Fortunately, everything worked out. However, a quick phone call to the lender before accepting the position could have reduced unnecessary stress and helped everyone better prepare for the delay. Credit changes before closing. Another issue buyers sometimes overlook is their credit. Opening a store credit card, financing appliances, co-signing for a family member, or missing a payment while under contract can affect the buyer's credit profile. Many lenders perform one final credit review shortly before closing. If significant changes appear, additional underwriting may be required. Although these situations don't always result in a loan denial, they can create delays that affect contractual deadlines. Your role as the real estate professional, one of your greatest responsibilities, is helping buyers understand that financing continues throughout escrow. You don't need to analyze credit reports or calculate debt-to-income ratios. Instead, remind buyers to respond quickly to lender requests, keep their employment stable whenever possible, avoid major purchases or new debt, maintain open communication with their lender, let you know if their financial situation changes. These simple reminders often prevent problems before they occur. Contract law connection. Financing problems don't just affect the buyer, they affect the Arizona residential resale real estate purchase contract. Delays in loan approval can impact financing contingencies, contractual deadlines, and ultimately the buyer's ability to perform under the contract. By educating buyers early and encouraging ongoing communication with their lender, Arizona real estate professionals help reduce financing-related disputes, improve communication, and better protect the public. Online discussion question 1. Why can financing problems still occur after a buyer has been pre-approved? Answer. A pre-approval is based on the buyer's financial situation at that time. Changes in employment, income, debt, assets, or credit during escrow may require additional underwriting and could delay or affect final loan approval. Question 2. Why should buyers notify their lender before making major financial decisions during escrow? Major financial changes may affect the buyer's ability to qualify for the loan. Discussing these decisions with the lender first helps prevent unexpected delays or financing problems before closing. Question 3. How can a real estate professional help reduce financing problems after a contract is accepted? Answer. Agents can educate buyers about maintaining financial stability, encourage prompt responses to lender requests, communicate regularly with the lender, and remind buyers to report significant financial or employment changes.